In today's market update, we're just going to run through three drivers for this week and then preview next week. The key events this week have been the Fed meeting, where we're seeing 100% chance practically of a rate rise in June. In the French election, we continue to see a lead of 60% to 40% for Macron, which is supportive of the market. And in China, we've continued to see more concern over the liquidity situation. So in this economy, we've continued to see more and more debt being pumped into the system, but not a lot in terms of response in terms of GDP growth rates. And as you can see here, they've now fallen to around 20-year lows. At the same time, this impulse of liquidity that we saw coming into the market last year that caught a lot of people by surprise and created quite significant rallies in the commodity index has fed into the industrial production index, but we're now in a position where the People's Bank of China are now looking to withdraw some of that stimulus. As a result, we're seeing the interbank lending rate, which is known as SHIBOR, start to pick up quite materially. This is the first sign of issues within a banking system, which is the sort of big unresolved issue that markets have with China, and concerns over the level of investment returns there relative to the cost of capital. Those issues have fed through into markets, so we've seen the European market perform very well this week. We've seen emerging market currencies weaken on those commodity price moves. That's fed into the sectors, so energy materials have been weak. Higher interest rates have helped the financials. We've had some reasonable results from technology. Looking into next week, however, we'll have the Bank of England talking, so the probability of a rate rise there is still very low. That reflects concern over consumer spending in the consumer sector and the inflation coming through from imports. We've got some reasonable data from the industrial side of the economy this week, so it will be interesting to see the balance that Governor Carney sees there. In terms of the week ahead, results season is still coming thick and fast. We've got Walt Disney and TripAdvisor on Tuesday in the US. On Wednesday, we've got Compass of particular note in Heidelberg Cement. On Thursday, we have BT and Deutsche Telekom. Just looking at, firstly, Walt Disney. The key for this investment at the moment is a stabilization in those ESPN and cable subscriber numbers, which we're starting to see a little bit more confidence coming out of the management team in terms of their expectations there. In terms of Deutsche Telekom and BT, this continues to be a story about people downloading more data, and particularly in terms of BT, their core market is obviously dominance in fixed line and increasing dominance in mobile. What's really going to drive the medium-term price of both of these stocks is this movement towards individuals using more data. At the moment, you only have around 10% of the population using more than 10 gigabytes, but this will change as people adopt connected cars, connected streaming cameras, and other forms of streaming in terms of TV. So you can see here the data usages go up markedly. Therefore, within this space, you can see some very aggressive compound annual growth rates for usage of data going into 2020. So 22% compound growth rates for fixed internet, 55% for mobile data, and 31% for internet video. That's it from me. Thanks very much.